We thought the worst was over, but we're about to enter a new financial economic crisis. This started as a health crisis, but the damage has been done and we're now about to enter the financial crisis of this recession. The government and the banks would have you believe that everything is fine and we're well on our way to recovery. That's a lie. The only reason it doesn't feel like we're in a recession is because the huge amounts of intervention by the government and the central banks, but that is now being all withdrawn. The stock market can see it being withdrawn. The stock market has started to decline, and now we're really going to see how strong the economy is once all that support that's holding everything up is taken away. Have a look at this chart. This is the real reason it hasn't felt like we're in a recession. The black line is now at 16%, which means we're making 16% more money than in 2020 last year. So where is the cash coming from? Up until the start of March, the black line was being held up by the blue bars, earnings from work, i.e. salary and wages. We were about 4 or 5% richer than the year before because more wages were being paid. Then the government stimulus starts. The blue bar turned slightly negative, wages and salaries went down. They would have gone down even more if it wasn't for JobKeeper, but the red bar shoots up. Guess who that is? That's Treasurer Josh Frydenberg turning the money taps on. JobSeeker is the big one, and the two $750 payments that went to pensioners and those that are on government supports. The funny thing about this chart is people are actually making, on average, more money during this recession. That normally doesn't happen. Normally in recessions, people make less money and become poorer. But actually in this recession, because of the money printers that went burr, people are actually making more money. And that is why this graph is so important, because all those payments on that graph have expiry dates. The countdown is on until these government payments are withdrawn, and the real pain of this economic crisis is about to begin. And guess what? These are about to be withdrawn next week. According to Treasury estimates, over 900,000 businesses have been supported by JobKeeper and over 3.5 million Australians have been supported by JobKeeper. And for JobSeeker, this has been doubled, so all those who are on unemployment benefits have, been making double that they were making before, but now this is all slowly being withdrawn. This has come at a huge cost to taxpayers, costing us $70 billion over the past 6 months, and it's costing us approximately $2.6 billion each week. In fact, this has provided so much cash to businesses, this JobKeeper program, that businesses over the June quarter actually increased their profits by 15%. I guess this is why the share market rallied, even though the June quarter was at the height of the various lockdowns and restrictions across Australia. From the 25th of September, JobSeeker will be reduced from its $1,100 a fortnight payment to $800 a fortnight, and JobSeeker will be reduced from its $1,500 a fortnight payment to $600. And another huge thing that they're not really talking about, and what most people aren't aware of, the huge amounts of casual and part-time workers before were actually making nearly double. They were getting the full $1,500 payment, even if they're only working a couple of hours and only making, $500 a fortnight before. Then they got this huge pay rise to $1,500 a fortnight. Well, the party's over for them, unfortunately. They're now going to be dropped to $750 a fortnight, a huge 50% pay cut. This means hundreds and thousands of businesses are going to be forced to stand on their own 2 feet for the first time in 6 months, and approximately 1.3 million Australians will be taken off JobKeeper as businesses no longer qualify and be put on the lower JobSeeker payment of just $800 a fortnight. Some very important data that came out from Digital Finance Analytics Martin North, where he surveyed small and medium-sized businesses across Australia, and a lot of them are guarded about, their prospects of the future, but 1 in 4 said they do not expect to be trading in 6 months' time. That's right, 25% of small and medium-sized businesses will not be here in 6 months' time. So if you thought everything's okay, everything's going to be fine, it's only been all smoke and mirrors, and the real pain is about to be felt. And if you thought that was bad, in Victoria, up to 35% of small and medium-sized businesses do not expect to be trading in 6 months' times. This is only going to make the mega corporations and the big corporations bigger, wiping out the small mum and dad pop shops. With digital finance analytics Martin North surveying many businesses across the nation, he said one thing he's really worried about is the Melbourne CBD, and he said if things don't recover soon, the Melbourne CBD could become a wasteland. Now, if you think it's not a big deal for these small businesses going out of businesses, you need to know this. Small and medium-sized businesses across Australia employ approximately 68.3% of the workforce. So with them going out of business in an already struggling economy, this is just going to make the situation worse. As the insolvency moratorium is removed, JobSeeker, JobKeeper removed, the real pain of this economic crisis and the balance sheet of businesses and personal balance sheets will finally be revealed. But if the views of businesses surveyed by Digital Finance Analytics are accurate, this will really reveal how dire of a situation we are really in. But if that wasn't a big enough crisis, there's also another crisis brewing right now. In the weeks and months in this recession, 1 million lending facilities have been frozen, worth $274 billion, giving the breathing space for small and medium-sized businesses and individuals the space they need to get back on their feet. There are people coming out now saying that this blanket loan deferral repayment policy was a grave mistake, and that this is breaking the rhythm and the habits of customers repaying their loans, and lenders that are now calling their customers, up to 20% of them are not responding to the bank's calls. Evans and Partners analysis Matthew Wilson has criticised the banks that are still classing these loans where customers aren't repaying until the March 31st as good loans. This should ring alarm bells in your head. The banks are still classing these loans that customers aren't repaying as good loans, and they're selling them to investors as AAA rated, and that means the banks don't have to hold reserves. So if customers start defaulting on these loans, the banks won't have enough reserves there, and this could lead to a huge crisis. But hey, don't worry mate, we're Australia, she'll be right. Won't happen here, it'll never happen here. Guess what? History doesn't always repeat, but often rhymes. And all these things that are happening right now in Australia is what led to other crises in other countries, and just because we haven't had a bad recession in 30 years doesn't mean it's not going to happen. He said the decision to amend, extend and pretend is just making the situation worse, and it's just going to make the hangover and crisis worse once it all catches up. And I completely agree. The banks and the government are just pushing this problem out. They're just throwing more money at it. But guess what? That's not fixing the fundamental problem. It's only giving them time. But guess what? Time is running out, and they've used all their tools before, so I don't know what tools they're going to use to get us out of this one this time. He said, and I quote, "The decision to put loans into deep freeze without qualification breaks a fundamental rule of banking, serving the all-important connection between the borrower and the lender. Borrowers have lost their repayment rhythm, and credit departments have lost the important repayment signal. We believe the deferral schemes may end up being a material policy error." What do you think? Do you think this was a grave policy mistake? And do you think we're going to look back and say this is what led to the crisis? But along with the JobKeeper and JobSeeker being withdrawn, the banks are now going to have their 6-month check-in with customers, and the only way they're going to get a 4-month extension is if they provide proof. Before, the banks were just giving an extension to anybody, but now it's going to take much more expertise to assess the situation of the customer and give them their options, and selling may even be an option. It's important to remember that interest is still being accrued on these loans, and they shouldn't be called mortgage holidays because customers are still being charged interest. And at the end of the day, this is going to be a big win for the banks, and we could see a really bad situation where customers' mortgages are increasing and the property of their value is falling, putting them into something called negative equity and becoming a mortgage prisoner, not being able to refinance or sell unless they want to sell at a loss. Credit risk experts have said indeed now that the loan repayment deferrals are passed, banks may start asking customers to use all these options first before being put back on a loan repayment deferral. So what does all this financial jargon mumbo jumbo mean for everyday Australians like you and me? This means the only reason it hasn't felt like we're in a recession and why the government and banks are saying everything is fine is because of all the stimulus like JobKeeper, JobSeeker, I said before, the two $750 payments. Couples could have taken out $20K of superannuation each, meaning they've had a huge boost to their balance sheets. The Reserve Bank started something called a term funding facility where they offer cheap cheap credit to the banks to loan to businesses and reduce interest rates on mortgages. So they use this term funding facility, and they've now increased that to 200 billion, where banks can borrow at just 0.25% interest. That's why we're seeing interest rates plummet. But now all these tools have already been used. So if we do enter the financial crisis after this health crisis that we've been in, what is the government and central banks going to do now? What you need to understand, and what most people don't understand, is a recession is they think that, it all happens over 6 months, and if it doesn't happen, over 3 months, they say, what? You were wrong, everything's fine, there's no recession, there's no crash. Well, guess what? Most recessions play out over 2 to 3 years. So all these things I've been talking about, it may not happen now, it may not happen next year, but what will the banks and government do if we do enter an economic crisis when they've already used these tools? Will there be a great reset? Will there be great debt forgiveness? Will they create a new digital currency? I don't know. Will they go negative interest rates, minus 10%? Who knows? But we do seem like we're on the verge of this monetary system coming to an end. So what do we do? Now, it is best to be prepared. And it's best to prepare right now. If you've been getting all this money thrown at you, like JobKeeper, if you've gotten, your superannuation out, if you've gotten your cash payments, don't just be like every Australian and go out there and spend like everything's fine. Pay off high interest debt, create an emergency fund, find ways to reduce your expenses, because in Australia we have a very high standard of living and people waste a lot of money on material things that they don't need. So cut those expenses down, and there may be some good investment opportunities or business opportunities come ahead. And we have seen that the unemployment has dropped because a lot of people have started creating businesses. Hey, if you're getting paid JobKeeper, why wouldn't you get paid to start a business that you've always wanted to do? For all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, smash the like button for the whole YouTube algorithm. It really helps out the channel a lot. And if you haven't, subscribe now. I'll keep you all up to date on the latest economic news, property news, personal finance and investing. I'll guide you through these hard times, and I'll be there for you because I know a lot of people need help right now. And of course, I'll see you in the next video.